Hi, this is Susan Salas from the Law Office of Susan Salas, or salaslawonline.com. Today I want to talk about the notion of saving your money for retirement. As a solo practitioner, for small business owners, for artists, for startups and entrepreneurs, it's a pretty big issue, and it's something that we all think is important. So primarily the point of having a 401k is to identify how much money you're going to start saving regularly, and a couple of things that make it peculiar besides just saving money. One of them is that it's almost always invested in some type of a stock or a diversified fund that's either conservative or aggressive or somewhere in the middle. And that allows you to make your money grow at a slower pace if you're conservative, or at a potentially faster pace, but also to lose at a potentially faster pace too, in an aggressive plan. Or the other important part of 401k savings program or retirement program is being able to set aside your money before it's taxed through FICA or through your individual 1040 taxation. If you're a solo practitioner like I am, or a small business owner, a single small business owner, then you should have, instead of just distributing funds, you should have a salary set aside for yourself. And if you're paying yourself $500 a week, then you should designate a specific amount of that before it comes out to you that goes automatically into this fund. Pre-tax dollars. They will only be taxed when it's distributed. It will not be taxed while it's being held in that account. And those are the two really important factors of any IRA or 401k plan, retirement savings plan. The point of this video is to tell you that there are these programs for just one participant, namely an owner. Or what I mean by that is for owners of a small business. So if there's multiple owners of one business, then you all and spouses can participate in the plan, but it's not for employees. So it really is. I'm going to be detailing in later videos how to actually set up these programs, and what are some of the caveats. But just to get you thinking about it, you want to start preparing to set aside your money, designate how much, and determine whether you're going to be setting aside an aggressive portfolio or a more conservative one, namely based on how old you are today, how old you plan to be when you retire, and if you want it to be kind of aggressive or not. Ideally, if you're going to be, I'm in my 40s, so if between 40 and 50, and I don't plan to retire at 60, I plan to retire at 70. Sadly, but that's just to make myself safe, to make sure that I have the time to set aside what I want. And besides which, working for yourself, it's a different program, and you don't mind working a little bit longer usually. So at any rate, that would be 30 years or so, and at that point, when you have 30 years, then you can go for something a little bit more aggressive in your savings program. But otherwise, if you only have 15 years, then you want to do something a little bit slower, and what you're going to be setting aside is going to be just slightly heightened by the time you do retire and start receiving your distributions. So there are other ways to save. If you just want to save your post-taxed income that you've already paid taxes on, and that is your net income, you can download apps. My two favorites are Saved Plus and Acorns. Saved Plus allows you to save a percentage that you designate of every purchase that you make. And so if you spend $100 and you set aside 10% of every purchase, you'll see a debit of $110, $10 of it going into your savings. It's a good short-term savings program if you want to save for a vacation or something like that, but obviously not for retirement, because there's no real benefit or growth perspective. But Acorns, what that actually does, it's an app created by a Pulitzer Prize winning economist, and it creates a diversified portfolio for you. That again, it's either on like a conservative or moderate savings program, or an aggressive one, or anything in between. And you don't get to choose the portfolio, but some of us prefer that. I don't know what I would be doing. I could, but if you do know what you're doing, then you might just prefer to do it on your own. But these apps do set it up for you, and that's what makes them so easy and interesting. But so if you are saving and you don't mind saving, just on a post-tax basis for something, to get into funds or to set aside just some cash, those two apps I really like. But what I'll be doing in later videos is detailing how to set up your solo participant or solo 401k or single participant IRAs. So start thinking about it, and start to identify what type of percentage you would be willing to tighten the belt every month to independently put into these accounts, because as a business owner you're going to be the one who has to do it. So you actually have to write the check to these accounts yourself. It doesn't happen automatically, but it is pre-tax, so there's so much incentive. And hopefully, I'll see you in the next video when I actually do go through some of these steps, as well as some of the caveats that are preventative or requirements. Please ask any questions below, or contact me on my website at salaslawonline.com, or by phone, and I'll do my best to answer explicitly what you wanted to know in the next video.